Hello, I am Cook County Assessor Bob Thompson, and today I'm going to just be sharing some information related to property valuations and property taxes. You all have either recently received or will be in the coming weeks your truth and taxation proposed tax estimates for taxes payable in 2022. The slide I'm going to show next is a timeline for how that tax estimate has come to be. We are currently here where the green circle is. You've just received your estimated 2022 taxes payable next year in two halves, May 15th and October 15th. The taxes for this payable year are calculated on the value date of January 2nd, 2022. So people have heard a lot about the recent increases in the market values of Cook County properties, the sales that have been occurring most recently. That is not what has been sent out recently in these estimated 2022 taxes. You can see here that that 2021 value is established from a sales study period from October 2019 through September 2020. So these sales back then are setting the value for January 2nd, 2021. You are then offered your valuation notices in March of 2021. Those are finalized during the local and county board of appeals, which close out in June of 2021. Then the auditor calculates and puts those budgets and applies those to the property valuations. And that's where you receive this recent 2022 tax estimate based on those levies and budgets, where there is still meetings that will be held during December to discuss those levies and proposed budgets. Those will affect your payable taxes in 2022. The following slide is where we are, the green circle is where we are currently at in the 2022 valuation, which will affect taxes in 2023. You can see we've just closed out our study period for the sales that have most recently been occurring. We will be applying those sales study trends to our January 2nd, 2022 value date. You'll be offered a chance to review and appeal those valuations. Must be done before the Board of Equalization in June of 2022. Then you will receive a new updated tax estimate in November of 2023 or 2022 for taxes payable in 2023. So that is just kind of a brief overview of the calendar and the timeline. Some people may be confused when they receive their estimated taxes for 2022 and didn't see much of a value increase on there. I can assure you that those will be coming based on the market changes that we've been seeing over the last 12 months. So my expectations for the 2022 assessment, most of us will understand that there has been a significant increase in the amount of activity occurring in the Cook County real estate market, and also those sale prices of properties in the market over the last 12 months. Specifically, we have seen an 84% increase in the number of sales in that October to September 2020 to 2021 study period. We had 597 sales in the 2021 study period that will affect values on January 2nd, 2022. That's probably the highest increase as far as a percentage in the entire state of Minnesota. I did see the tentative numbers for the northeastern region, which consists of 9 counties, all the way down to Crow Wing County, and Cook County was the leader in that percentage increase over previous year. This is two numbers that most people can understand. The median sale price of a property in a county is often the measurement used to determine where the market is at in any given year. And you can see in 2022, the study period for that assessment, our median sale price of a home has gone up 99%. It's gone from 168,000 to 335,000. The average sale price of a home or cabin has gone from 274 to 393. over those 2 years. So a 43.5% increase. Now, the adjustments that we will be looking at making in the 2022 assessment will vary based on property types. Looking at vacant land in some particular areas, they may not see any value increase at all. However, improved properties almost across the board can expect to see some adjustments being made. And to take it even another level further, the improved properties on Lakeshore will probably be seeing more of an increase of the improved properties that are not on Lakeshore. So the next slide I have here is just some tentative numbers that we are looking at right now in our 2022 trial market values. This is before we've made any adjustments. So essentially taking your 2021 valuation and applying that to the sales that have been occurring over that sales study period from October through September of 21. Now, you can see here the highlighted segments are some of the most important ones that we are on top of. The residential, this is the top line, our median ratio is at 73.5. There's 122 sales. This line here, this column is the coefficient of dispersion, and that's showing 11.9 in this category. That means that we have a really tight range outside of that median sale price of 73. It means that the majority of these 122 sales are going to be also valued quite a bit under that those sale prices of those properties. Seasonal recreational residential is the next category down. That one is at 67% with 79 sales. Coefficient of dispersion is at 19.9, which is actually an acceptable range in our study criteria that we use. And when you look at like residential bare land and seasonal recreational bare land, those are actually close to where we want them to be. We want those to be between 90 and 105%. There's a significant number of sales here. So these categories, they may not be seeing much of an adjustment, where these improved categories may be seeing more of an adjustment. We will also be looking at on and off water separately within these categories. So the residential bare land on water may see more of an increase as residential bare land off water. Similar with the improved properties on off water may see two different types of adjustments, and each taxing district will have its own adjustments being made. At the very bottom, you'll see all property classes combined. We're at 76% on 449 good sales. Those are sales that we will be using in the study. There's also an additional roughly 140 sales that have been rejected from the sales study period. That would be for things like relative selling to a relative, a foreclosure sale, a non-MLS marketed sale. Those would be rejected from the study if they are not typical of the market. The next slide is breaking down Tofty in specific. And you can see there that median on all combined property classes is at 74. The next slide is for Lutzen specific, 75% on 105 sales. And the next slide here is going to be a demonstration of when I am going in and making adjustments to property values, that it is not always going to result in a property tax increase. If your value goes up, it does not automatically mean your taxes go up. And these next slides will kind of break down those scenarios where that can happen. So this is a 4-house town hypothetical where this town costs $4,000 to operate. So in this scenario, if each property is valued at $100,000, they're each paying a quarter of that operating budget of $4,000. So their taxes are $1,000 each. Now, if that budget is cut in half, so now it's $2,000 to operate this town, you can see even with no value change, these taxes have been cut in half. That's a direct link to the levy and the budget to operate that town. Now, the next slide let's say your values are doubled. Each property consistently, the value being doubled to $200,000. However, that operating budget remaining at $4,000, you end up having the exact same tax bill on each of these properties. That's the value being an apportionment of the levy, the operating budget. So we oftentimes explain that if we double everyone's value, their taxes don't necessarily go up. Now, if the values are cut in half, let's say the market sees some decline or the demand drops off and values start to go down. If the operating budget is still $4,000 and we were to take these $100,000 homes and divide and cut that in half, the taxes still remain at $1,000 because that's what it's taking to operate this township. Now, in another scenario here, let's say the single property has a value reduction. Maybe every other property has been maintained well, and this property has not. So this person calls and appeals their property valuation. The assessor determines it should be reduced. This property being reduced to 75,000, while these other properties remain at that 100,000, and the levy is still consistent at $4,000 to operate the town. Now, some of the tax burden from this property is then shifted to these other three properties in order to make up that $4,000 operating budget. In this scenario, you can see we have one lakeshore property valued at $200,000. It's picking up more of the $4,000 operating budget than a $100,000 off-water property. These are paying $800 a piece to make up that entire $4,000 budget. Now, if I'm adjusting the market appreciation differently on these categories of property, you can see here the adjustment has been applied at 20% on the on-water property and only 7% on the off-water properties. You can see that the actual tax bill on these properties where they did have a value increase has actually gone down, meaning that more has shifted over to the lakeshore property that is seeing a faster or a greater market appreciation rate. That's given that the operating budgets remain at $4,000. And this is just a little bit further breakdown. What is happening is that the burden is shifting to these other properties and their tax bill is actually going down while their value is going up. And this lakeshore property's value is going up and their taxes are going up. That is due to unequal amount of value increase across different property types, which is common at the end of the year when the assessor makes his adjustments. So lastly, this slide here is showing what are the effects or the impacts if a property now becomes exempt, if it's purchased by an exempt entity that applies for property tax exemption. So this one property drops out of the tax base completely in this scenario, and the entire tax bill of this property is then distributed to the remaining three properties. So this happens quite often in taxing jurisdictions. The impact of it is felt is more recognizable in a smaller community when you have high valued commercial type properties now becoming exempt from property taxes. It is shifting some of that burden over to these taxable properties. So the takeaways from the four-house town scenario is that the class rates are set by the legislature. Commercial properties will pay a higher tax rate than a residential property. A residential property will pay a higher tax rate than a homesteaded residential property. The legislature says who's eligible for exemptions and exclusions, and they determine the rules and process for assessment and taxation. The first step in the process is that the assessor sets the values and classifications for each property. We're essentially slicing up the pie. The next step in the process is that the levies and budgets are set by all the taxing entities, the hospitals, the schools, the counties, and the townships. That amount of budget determines how big the pie will be. And lastly, the auditor applies those budgets to the slices of the pie in order to ensure that enough money will be collected to cover those budgets. So hopefully this will provide at least a little bit of explanation on why your truth in taxation estimate that you've just recently received is not showing this anticipated value increase that everybody is expecting to see in the 2022 assessment, as well as just a brief overview of how an increase in value doesn't always necessarily mean that your taxes are going to go up. This 4-house town scenario is very similar to how it's applied, just with many more properties. You know, in Cook County, we have roughly 12,000 taxable properties, but those effects are going to be very similar. If one property category is seeing a larger increase than another property category, it's going to see likely a higher tax increase than the other property categories. So if there's any questions, feel free to call the Cook County Assessor's Office, and we'd be happy to go over and talk about some of these things with you. Our office number is 218-387-3650.